Welcome back. Jack Lowenstein is the Morphic Asset Management's founder and has a new ethical fund coming up to the market, Morphic Ethical Equities Fund. Let's find out what's going to separate this company in the marketplace. Jack, good to see you on the show.
Thank you very much. Good to be here.
Now, Jack, tell us about Morphic Asset Management.
Yeah, it's business has been around for about 5 years now. I worked for all my investment management career at Hunter Hall until I decided to leave in late 2011. When I left, one of my most brilliant colleagues, Chad Slater, said, well, if you're leaving, I'm leaving too. So we left to start this new business, and the aim was to set up a funds manager that had all the quality stock picking that Hunter Hall had been known for.
Yep.
But with a much closer focus on risk management. And our aim basically is to deliver good returns for investors from investing in global equities, but with very much reduced volatility, because we know that people don't like to see a 10% up month followed by a 10% down month.
No, that's very, very hard to sleep.
And that's what we're trying to avoid. We're trying to help people sleep better.
Now, I did some work this week on the performance of ethical funds, and they've continued to do really well. Why do ethical funds do well?
Well, I'm very glad you say that, and I'm glad you've done your research. I mean, all the academic literature now is pointing to ethical funds doing at least as well as the market, if not better. And I think the reasons for them doing better and why we believe our fund will generate better returns for investors than a non-screened fund is a lot of things we can't invest in, particularly fossil fuels, we believe are at best value traps and probably, in fact, are doomed to underperform in the long term. And the reason for that is quite straightforward. The market is valuing these oil and gas companies and coal companies as though they'll be allowed to mine or extract every single ton of reserves they've got. The reality is, if they do, the world will be drowned, literally, because global warming will be so affected. So the view is generally amongst climate scientists that only about 20% of their resource base can actually be extracted without us hitting that tipping point of a 2-degree temperature rise. Now, if that's the case, those stocks are inherently overvalued. So just not owning them should add to your performance.
But also, I've looked at it from this point of view that even if you are a climate change doubter, you have to recognise that there's a big percentage of the populations of the world who believe it. And so companies like Toyota develop Prius, and companies like Volvo have looked at low energy impact trucks and all that sort of stuff. There is a market acceptance of the science, and as a consequence, there are companies that are selling to the people who believe it. That's a trend that favours ethical funds as well, isn't it?
Look, I think the really extraordinary thing is we wouldn't be having this conversation in a way in America. In America, 20% of all investment funds now have some form of ethical screening on them. In Australia, it's less than 1%. We are way behind in this area, and I think part of the problem is that there's not enough product for people to choose. So we've been amazed at the response we've had to our new fund. We launched the fund about a week ago. The offer closed on April 19th, and we've had 5,000 individual visits to our website since then. We've had 900 and odd prospectuses downloaded online, and the offer's scarcely opened. So we've been bowled over by the interest. And we've already, we started off, we've got to raise at least $38.5 million. We started off with about $9 million in the bank from people who committed in advance, like myself and Jeff Wilson. And we're already up to about 30 million of commitments. So it's an amazing response.
Do you think a lot of Australian investors aren't aware of how well ethical funds have performed?
I think that's very true. I think there is a skepticism amongst some people that there's even the idea they're going to underperform, which in our view is ridiculous. There's absolutely no evidence for it. And I think, but ultimately, to be honest, it's the skill of the fund manager that makes the difference. It's not the screen. We've had pretty good returns since we launched our Morphic Global Opportunities Fund. We're up 17.3% since we launched over the last 4.5 years. That's per year, by the way, not in total. And I think that ultimately it's the way we do things that's more important than the actual screen.
Now, tell us, a lot of people wouldn't understand what you mean by screen. What does that actually mean?
Okay, what it means is we're not allowed to invest in fossil fuel companies, nuclear, armaments, tobacco, alcohol, gambling, rainforest destruction, and factory farming.
Some people say, what in the hell's left after all that?
Well, the answer to that question is about 90% of the investable universe, so a lot.
And you are also going global. You're not just restricting yourself to
I've been a global investor all my life, so we invest globally. Basically, there's more than 10,000 companies we can invest in that meet our minimum size requirement of $400 million US and have enough turnover that we can manage our risk management process, which includes having stop loss in every position. So whenever we invest, we try to make sure that we don't lose too much. So we can only do that if we have a rigorous process that says, if you're wrong, recognise it early and cut the position and do it quickly and leave liquidity for that.
Do you invest in Australia if there's an opportunity? If you call it global, are we a part of your global assessment?
Definitely are. Australia is about 3% of the world market and an important 3%. And we're very open to investing in Australia. It is literally 3%.
What about the hedging? What do you do? Because you're investing overseas. Your currency implications can be very important.
Well, we do manage the currency as a separate asset class. In a sense, we've had a very easy decision. We took the view when we launched, and the dollar was about $1.10 US.
That wasn't too hard.
Yeah, we thought this is overvalued. We're not going to hedge back. We probably won't change that. There's been a bit of volatility lately, but our view is that still there's further down to go for the Australian dollar. We're not going to hedge that. And we also know a lot of our investors invest with us in our existing fund, and we'll also do so in the Morphic Ethical Equities Fund with a view to capturing the benefits of having foreign currency exposure. I take myself, when I retire, which is many years away, I do want to travel more overseas. If I haven't got any overseas assets, I've got no hedge for my expense of travelling overseas if the Australian dollar is weakened in the meantime.
I should explain to my viewers that this is what fund managers do. They treat their life like an asset management. There are a lot of Australians wouldn't even think about allocating their income overseas for when they travel, but that's what fund managers do.
Well, and I'm a very committed funds manager. I mean, I've got I've got all my personal financial wealth in our funds, apart from my home, literally all of it, because I think that you've got to be there with the investors. Alignment is critical.
Of course. So, but Jack, I've listened to you over the years, and you're not a natural rah-rah supporter for stocks have to go up, and you have some question marks over the foundations of this bull market. And given the fact that you invest globally, do you have reservations about the future of stocks?
Right now, I don't. I think that we've been in a 30-year bull market for bonds, and that has meant that equity prices have gotten more expensive in terms of the PE multiples. But I think what we're seeing now is global growth is accelerating. So my expectation, and this is particularly true of the US, where rates are going to rise first and fastest, as we see bond rates go up, I expect to see equities derate a little bit, but I also expect earnings to accelerate. So I think growth is going to be more than enough to offset what might. So P's might go down by a couple of points, but earnings are going to grow faster than that.
So let's go back in time. I've listened to you over the years, and there are other people who had similar views on the matter. Was that everyone had good reason to worry about negative interest rates and the sort of things that central banks were doing, and when people asked me about it, I expressed the same concerns. But I always would add, but if the global economy grows, in a sense, it's a get-out-of-jail card. And at the moment, we're getting that growth, and that's surprised a lot of people.
Well, I like to talk about the Goldilocks corridor. If things are going too well, the danger is interest rates get raised very sharply, and if things go too badly, we drift into recession. That's not good for equities either. My view is we're still in the Goldilocks corridor, where growth is good enough to not put us in recession, but not so fast that we're going to overheat and the Fed's going to go crazy.
Yeah, but isn't it interesting? This is the last sort of wild and wacky questions. That did you ever imagine that a President Donald Trump would actually be good for the stock market?
Well, I must admit I didn't, but I could see where the momentum was going immediately after he got elected. So we went back to being fully invested very quickly.
Yeah, I got to say, I was anti-Donald Trump until I saw the markets accept, and I thought, well, if the market wants to buy him, I'll buy him as well.
And that's the point. The global growth and US growth is so strong at the moment that what Donald Trump does is actually a little irrelevant in the medium term.
Yeah, excellent. Nice to see you, mate. Good luck with the fund. And when is the final day before it lists?
It's going to list in early May, and the offer closes on April the 9th.
Okay, good to see you.